We need to be prepared for the bumps in the road because they'll come, whether that be an individual loan or general market dynamics or whatever. But look, it's a buoyant market, isn't it?
Welcome to the Stanford Finance Podcast, where we unlock the strategies and insights that drive success in property development finance. I'm your host, Pete Beaumont, and in this episode, we're breaking down what it takes to not just compete, but truly stand out and thrive in this industry.
You do get the old sort of boiling frog sometimes with lenders, that they'll give people terms that are full of tripwires, and then people trip over the wires and they go, "Not my fault, mate."
Joining me today are two industry trailblazers with an exceptional track record. Mark Hawthorn, founder of Landmark Group, and Stuart Fraser, CEO of Stanford Finance.
We want to double the size of the business. We want to do it over the next 24 months, not the next 3. We're going to have to evolve process, procedure.
Get ready for an energizing and insightful conversation as we dive into the mindsets, strategies, and real-world stories of these two dynamic leaders. Welcome to the podcast, Mark. Welcome to the podcast, Stuart. Great
Cheers,
to have
mate.
you guys here.
Thank you.
So we'll just start. We'll get deep dived in. Mark, can you give us a bit of a background as to where you started in the industry, how you found out development finance or finance property was your industry?
Yeah, left school at 16, 1997, got a job as an office junior at estate agents. Quickly sort of moved through there. I'm not that employable, to be honest. So I'm not. You two know that. I'm not that employable. So I left there when I was the wise old age of 19 in June 2000 and went doing deals for people. So some people would say I set my own business up, and I would always say the group started in June 2000. But really, I was a 19-year-old lad with a 700 quid car and a mobile phone.
Yeah,
in a bedroom at home doing deals, and then I got some money and some more money, and I think most people know the rest of the story.
Yeah,
It brings us where we are today, and then within that, finance is obviously wrapped into absolutely everything. So even when I worked at the estate agents, and one of the first things I learned there was it was Halifax Estate Agents, which was part of Halifax Bank, as it then was, or Building Society. And I quickly realised, this has been like days, I realised they didn't give a toss about selling houses. They cared about selling mortgages.
right.
And the whole thing was effectively a front to sell mortgages. And then when you looked at all the other estate agency chains, they were all the same. So dev finance, mortgages, property finance is inseparable from property.
Yeah, I wonder if that would have flown today in compliance and you've got a business feeding another business there. I'm not sure that's a fair market.
Didn't say it's vertically integrated, but I get your point.
Yeah. And Stuart, your early career didn't necessarily go down the property route.
Totally different from that, basically, yeah. So look, spent 22 years in utility maintenance. Took a summer job when my degree finished because I was desperate to earn money, and never left until I sold my second business in that space in 2022 and set up Stanford with you. So yeah, very different route to Mark, but we've shared some war stories as we've got to know each other over the last 3 years, and a lot of similar lessons in the industries about how you go about doing business, what's the right way to act, what's the wrong way. I'm sure we'll touch on some of that today. So yeah, a different route to get in here today, but similarities in the story, I suppose.
Yeah, absolutely.
Doing deals, that's what most of it is.
Yeah, absolutely.
It's a bit cliche, but it's just doing deals. I don't mean buying and selling businesses. Just if you're doing a utility contract or you're buying a ground rent portfolio, you're doing a dev finance thing, it's, if you push it high enough, it's two people.
Indeed.
One on each side dealing with each other.
Absolutely.
Even countries are like that now if you look at it.
And I think, look, my old business was very different in some respects in that you won long-term maintenance frameworks, but you were ultimately doing a deal to secure it. You then just had to deliver on it. And we've heard some real stories, or I have, is the last 3 years has been a steep learning curve for me. I'm new to it, and often I'll ring a friend and say, this has just happened. Is that normal? Where that people they've agreed a loan, and then the lender can't provide the capital on a monthly basis when they need a drawdown. Bit surreal to me. So I think it's doing a deal but then delivering on what you've agreed is a fundamental to any business, whether it's utility maintenance or lending or buying and selling property. The core business principles, aren't they?
Absolutely. And just taking a step back as well, so you both have degrees? No. Real world.
Yeah.
And what was your degree into?
I'll call it management, business studies probably, really, but it was titled management. Met my wife there. She probably helped me get the degree over the line in the end, because 3 years in I was done in with it, bored. I wasn't a massive fan of education. It was a bit of a means to an end. But look, just getting into work and trying to create something. When you come from probably a humbler background than some of your friends do, and I think Mark and I share probably a similar background in that regard. You see the finer things in life, but you can't afford them, so you want to get on that earning train, don't you, and try and make something of your life and better yourself, and getting into the big wild world and earning money as soon as possible was a big driver.
Do you think there's an important, or do you think you're in a better position to go straight into the working environment, or do you think there is still a place for university?
I think university is probably too specific. I think education, which I know people, but education can be anything. I was listening to a podcast on the way. That's education. Read newspapers at the weekend. Knowledge, power, etc. It's a catch-22. I think the hybrid is best. So my nephew's just left sixth form, and my light advice to him, because I didn't want to get too involved, was you're better learning on the job than trying to learn and go into a job, because he wants to do marketing. I said, whatever you learn now is probably 5 years old, because that's how university works. Yeah. And then when you get into the workplace, they'll be 5 years ahead, so you'll be 10 years behind. So the easy way to do it is on the job, because it's like you can't teach someone to play football by a book. I don't believe you can teach someone to do business by a book either. No. You can learn some principles, but you need to be able to apply them. And then you realise that when academia hits reality wins.
Yeah, absolutely.
Very much so. But I don't think one size fits all either. It's down to the individual. I've got 3 kids, you've got 2. Some will go the full flight of education, maybe even into a master's degree. And one of them certainly won't. And I think, look, apprenticeships and the right apprenticeships have got a part to play there. A good friend of mine, his son's just done his GCSEs, and academia isn't for him. But if I look back to my old business, which I still have an involvement with, he would thrive in that environment. It's not desk bound. You're out in the street and the highway interacting with the public and the local authority and various different stakeholder groups as you're causing chaos, digging the roads up. And he would love that environment. And I think one size certainly doesn't fit all, but if you can take a youngster who's keen and hungry and has personality and can interact and is humble and can deal with the public, there's enough opportunity out there for them to go and thrive, really. You just got to open the door for them.
Yeah, of course.
Good point that on social skills. That'll get you a hell of a long way. And you can have 10 degrees and you can't look someone in the eye and not do a deal but have a conversation, you're not going to get, you end up in a dark room somewhere.
And I think it is certainly a massive factor now, maybe less so when we were younger, because I've just worked out I'm slightly older than him with his backstory, but phones and social media weren't a thing in our real impressionable years. I think my first phone was I was 18, 19. Nokia 6210 playing Tetris or whatever it was. Yeah, but so much of the life comes through that now. Yeah. Some of them do struggle with some interaction. I mean, I can't get my kids to answer the phone, but they'll Snapchat me in 2 seconds. They might even FaceTime me, but to actually get them to hold the phone like that is really weird to them. So I think it's massive and more prevalent now. If you can cope with the modern world, and I struggle with some aspects of it. I mean, I've never posted anything on social media in my life, but if they can also do the old-fashioned people skills, people do business with people, particularly when your back's against the wall and the chips are down. If they can do both, they're set up well for the future.
I think it becomes stronger with AI, that as well.
With AI?
Yeah. Because if everyone's got the same data, it's not just how you assimilate the data or the whatever's coming out of the AI GPT, it's how you interact with people. And being genuine, authentic, believable, trustworthy, That's never going to come out of AI, ever. It's not. The human brain's too complicated for that, for people to look at each other. And so I think we've been doing quite a bit in the business around AI, not throwing it at everything, but more looking at the art of the possible. And one of the risks with it is you throw yourself into it, and in 2 years everyone's going to have the same as you anyway. Yeah. It's moving that fast. Indeed. So you sort of go a bit, which is why I'm a contrarian, and go, what can we develop that isn't AI, that sits well with AI? And it's the bit that sits on top of it, really, the sort of interface, which is the human bit.
Yeah, the mid slice.
Yeah, and but that's the really important bit in these kind of worlds. If you Google dealing with Meta, maybe not. But if you Stuart, you dealing with a borrower, or a borrower dealing with you, broker, that's the important bit. The numbers are just the background.
Yeah. And I think you can tell why we get on here, because I couldn't agree more with that. And I think going back to your question about education and kids coming into the industry or coming into the working world in general, my son goes to a good school, miles better than the one I went to, but I look at some of his teachings, and some of those teachers are using AI to create the flow of that lesson, but a lot of the pupils are using it to shortcut doing the homework, so that they're not really getting the benefit. And how do the schools police that? It's so wide-ranging and intelligent that they're going to struggle, aren't they? So it's a real interesting dynamic, but I think the balance is the critical bit. People do business with people. I'll repeat it constantly. Me and a team built 2 businesses on the back of that. But I think you can use these things to be so much smarter and efficient. I think there's definitely a space for a good balance of both.
Well, absolutely. And when you talk about AI and children's use in education, for example, I think a lot of that learning comes down to your upbringing and the influences above you. And with that in mind, you might not have had AI when you were younger, but did you have anyone that specifically guided you through where you got to, your mentors, I guess?
I wouldn't say specifically. My dad had businesses. I mean, they didn't do that well, but he had businesses, so he was always working, always doing different things, always sort of ducking and diving. So you sort of lean into that a bit. And the mentors thing, I mean, I learned stuff off Stuart, I learned stuff off you, so I'm not one of those who picks someone and says, please, can you be my North Star? I'm much more, everywhere I go, everywhere I do, everyone I speak to, everything I read, you're always trying to sort of lift things from it. So you can learn a lot from people who are dead, because you can just read biographies. Yeah. So I think people get a little bit, again, fixated on, will you look after me, please, and be my mentor? Whereas the reality is, every second or every day, hopefully people listening, watching this will learn a bit of something. It doesn't matter where you get it from. Doesn't matter at all.
It's funny that because of my relationship with Mark over the last few years, I've read more books in the last 2 years that he sent to me than I read through the rest of my life. Really? And some phenomenal stories, when you're looking at businessmen who've created phenomenal success from very, very humble beginnings. But I think on the mentor piece, look, my dad was first and foremost my mentor. Like, if they wrote a textbook on a father, this guy is it. But like Mark rightly said, I think if you go out every day, every week, in every aspect to your business life, and interact with people, you'll always learn something, and not necessarily good. You'll learn, actually, I really don't like that. True. I'm not going to be like that person.
What not to do, as I call that. Yeah.
But I was so fortunate very early in my career. A senior client in my industry was doing like a back to work day on the tools in the van. You see TV programs with it in now, and we had an interaction in some pretty difficult circumstances where I'd knocked a hole in one of his gas pipes, and we're evacuating a building in the middle of Stockport. I'll never forget it. And I was in my little escort van and I had an interaction with this guy, and I thought, wow, he's really impressive, and ridiculously impressive for doing the job that he was doing. Anyway, turns out he's a director of what was the local gas authority at the time, and 2 weeks later he reaches out to me because he took my number. And 25 years later, he's one of my best friends. He mentored me for the whole period of my career from then to now. He'll kill me. He's either an OBE or an MBE now. I get it mixed up. But just a phenomenal guy who would be a father figure and a sounding board for nothing else other than he's seen something in me he liked, and he's a big believer in doing his bit for the next generation and bringing them through and making sure that industry, which keeps the lights on, keeps water at the taps and all that, has got that throughput of skills and people. But yeah, what a phenomenal effect he had on my career, and did a lot of work for him, good and bad. But he was just a massive positive influence on me, my business partner, and the 3 companies I worked for or owned a bit of. Yeah, just if you can meet somebody like that, you're just so fortunate.
Yeah, and he saw something in you that it resonated with him.
I'm not sure what it was, but yeah, he did. I think he just liked the hunger and the drive and the fundamental of, look, we've made a mistake here, right? I've damaged your gas pipe, not the other way around. I'm sorry, we didn't do it on purpose, but the here and now is, how can I help you manage this situation? And I think he liked that, because that's a fundamental, though. We have those conversations with people borrowing money off us. Look, you've made a mistake, we get that, right? Just be honest with us, and we'll find a way through it one way or the other. It's when they're not honest with you, and 6 months down the line, a small problem's now a massive one. We're frustrated with them because they've not told us the truth when we could have. And I think that's just a big lesson in life, particularly business. Yeah,
absolutely. And in terms of the personal qualities, going back on that point, you've both had fairly substantial teams of employees. How many guys have you had on the books at any one time?
So we sort of don't, because of just the way we structured it. So at the moment, I think we've got about 19 people. But if you go by extension and look at the management we control, and we could have thousands of people. Yeah. If we looked after the window cleaning for all the buildings we've got, or we looked after the communal maintenance, it'd be sort of like running a local authority.
Yeah.
Hence why we outsource it.
Yeah.
And I think, but look at Network Plus, which, as I say, I owned with a business partner and a team of people. A lot of the management were equity players in that business, which was a massive reason for its success. It was a team rather than an individual. Sure. When we sold the majority of the company in 2022, we had 5,500 employees, direct or indirect, because we use subcontractors, but their businesses were predominantly just working for us. So a lot of people. And I think as individuals, we probably all have a sweet spot. Like my business partner could run 10, 15, 20,000 people. I preferred a couple of hundred, I'll be honest with you, where you could be a bit more intimate and know a little bit more of their dynamics and how to get the best out of them. That becomes very difficult as you scale and you're managing through layers. But yeah, look, people are a business's biggest asset, but probably also the biggest risk if you get the wrong ones, or you lose the culture that you're trying to create through those layers of people. So yeah, it's a challenge, but I think if you can get good ones, look after them and hold on to them and make them feel part of a team. Yeah,
absolutely. And what's the biggest quality you would say? Because obviously every hiring person is different as well. What's the thing that you look for?
To pick the biggest is, I think, a difficult one, but so, be humble, right? We used to compete with other companies for business, and we were all doing fairly well. Our businesses were growing, and these guys are turning up for meetings with fancy watches and big flash cars, and like you're almost working for the local authority here. Have a bit of sense about you. So I think if you're humble, you're honest, if you treat people the way you want to be treated yourself. I had a bit of a burp in my career, for want of a better thing, when I did 12 years for a big company and it was doing well, and for a load of reasons it didn't work out, and I exited stage left and went in partnership in a much smaller company, but took a stake. But the lesson I learned in that transition was a lot of people I'd treated well on the way up treated me well when I ended up back down here, probably in the industry. Some didn't and should have, but most did. And that was a real sort of reminder to me of, if you just are right with people, generally treat them with respect and how you expect to be treated, and you'll get it back one way or the other. That will probably be the biggest one.
Yeah,
I'd echo that. Yeah, I mean, we have in a roundabout way, humility is one of our sort of group values, but it's sort of how do you live it. and then like Stuart said, it doesn't matter who you are, treat people all the same. You might focus more on someone because you've got more commercial value. That doesn't mean you ignore the receptionist or you don't say hello to people, please or thank you. And then it's just, I suppose, fundamentally humility or integrity, which aren't the same, but they're sort of on the same spectrum. Do what you say you're going to do. I mean, in my world of property and in your world of finance, and I know we all sort of overlap, most people don't. They don't. They just don't. You see these lenders saying we did a deal in 7 days, but they might have done 1,000 loans, and it's just coincidental that they did one in 7 days because somebody probably turned up with an auction pack and they'd exchanged contracts and they had no choice. But the reality is 99.9% of what they do isn't in 7 days. So it's a bit misleading. And you also see, again, and I can be observational about your world, rates from X. And it's like, I can't borrow at that. Yeah. You can't borrow at that. You can't loan at that. Yeah. And it's just to get the phone ringing. But if you start pointing a relationship with someone is a lie, it's not going to get very far. No. And somewhat ironically for those people, they attract the crooks as well. 100%. So they're a bit tricky. So the people who are a bit tricky go, well, if you say, listen, we're not going to do it for less than X%, it doesn't matter if it's 10% loan to value. It's 10% loan to value, go and see Santander. Yeah. People get that. We get it in the ground rent business. People ring up and say, I've been offered this. And we say, good luck, mate. Yeah. You've been offered that, snatch your hand off. Yeah. And then sometimes 3 or 4 weeks later they come back and say, well, it's very conditional, it was this and it was that, and we're open to a more grown-up conversation with you guys now, because we actually like the fact you were very blunt with us and said, if you've been offered that. So humility and integrity, yes, they're inseparable, but to us they're sort of not.
Yeah, okay.
I think that's probably the biggest learner for me getting into bridging and dev finance 3 years ago, whenever it was, when we met Pete. People do lie, like they'll blatantly lie to your face. We've had our fingers
burned. They don't know they're lying, some of them.
Yeah.
It's that inherent. It's just everything's bullshit.
And I think we've had
it's people listening to this laughing because they'll know that's true. I can say it now.
But it is, and I think we've had our fingers burnt 3 times, probably in building a 100 million quid loan book that we've got today from nothing 3 years ago, where they've lied. We fell for it. We've not done our governance, our background checks, due diligence, even just got to know the individual a little bit. Pick the phone up to the borrower and say, look, you didn't tell me about this. Surprisingly, shock horror, it's come out as we've done our due diligence. Talk me through it. And they can't, because it is what it says on the tin. So I think, we're getting better at working through that. Uliana, who sat here a month or so ago, who you introduced us to, helped us massively with process and procedure around, look, tell us the truth, because when you fill this pack out, it's going to come out. And it's massive, that, because it's just such a waste of time.
And it's still not accurate when it's filled out sometimes.
Indeed.
I think sometimes you're broke, it's not to be too critical, but they've got nothing to lose. If they just fill a form out and send it to you and it's not quite true, and it sort of gets passed, then they almost imply that it is true because you've checked it.
Yeah, indeed.
So they've nothing to lose, and they send it to 10 people, and one of them bites, and then it's £1 million deal, and they get 1-2%, whatever they get. They've almost incentivised to not quite tell the truth, like some salespeople.
Indeed, but I think, look, it's then on you to take that info and do your DD, isn't it? It's a fundamental, and we've had so many fall out at that process. But again, there's a massive broker network there. Again, it's amazed me how many there is. You've helped us get to know maybe 10 or 20 of what you believe were the better ones.
Probably all of them.
Yeah, and we've now developed some great relationships. Yeah. We did our first deal with Ark & Co. We've learnt loads off of them, haven't we? The guys at Mackenzie Byrne, we did one of our first deals with them, which was great. So there is some real good ones out there, but you've got to nurture those relationships. You've got to make them, remind them we're here, got money to lend. We can be quick if you want us to. We aren't going to say yes and then no, because ultimately we don't have the cash. It will only become a no from a yes if what you've told us isn't true. But you've got to get. We spend a fair bit of time in London between us, don't we? Building and developing and nurturing these relationships. We've got a session down there October, November time with a group of them, because you've got to put the time in to remind them you're here first and foremost. How many lenders is there out there?
They're bombarded.
You only open that Bridging and Commercial magazine, and there's got to be thousands of us claiming we're different, which is often not the case. So it's been a real learning curve for me how many there is, but some, like you say, that you tell them what you're about, you tell them the space you lend in, and they'll send you something that couldn't be more distant from your...
Some property agents are the same.
It's crazy. But look, you live and learn.
It's funny though, even as we start to grow the business, grow the book, and potentially grow the team, I start thinking about the hiring process, and I'm thinking, okay, how do we bring somebody in that has the same core values that you or I do, that says we're not just interested in getting a deal done, we're interested in getting the deal done and then completing the deal at the back end. Because if you pay someone up front,
misaligned incentives.
And it's so hard to find that balance as to get somebody that really understands that we're lending our own money, and it hurts. A loss hurts. So
we tried it in LDS where we said to people, we'll pay a little bit up front and we'll pay a lot more at the back end. How many brokers do you think went for that?
Yeah, not many.
Absolutely none. It was just, but I'd just have the money up front.
Yeah.
And it wasn't because he'd sold us a pig or anything. It was just this sort of delayed gratification concept of brokers and property agents are real pure traders. So what people tend to think is the broker or the agent acts for you. They sort of do, but really they act for themselves. So there's buyer, seller, or borrower, lender, and middleman. Recruitment agents are the same, probably worse. And if they don't do a deal, they don't get paid. So actually, they're back solving to doing a deal. They're not back solving to getting you the best deal at the best price. They're not back solving to. They're just back solving to what can we satisfy everyone out. What's the middle bit? So you and the other side, effectively, are in this sort of secondary tug of war to go.
Indeed.
And it's not, as we know, it's not about getting. And some lenders do this. In fact, what a lot of lenders do is, and we always joke, it's banking school. You know, first day at banking school, they say, right, borrow people the least amount of money for the most you possibly can. Yeah. You wouldn't do that with an investment. You wouldn't say, find the best returns and put the least money in. You'd optimise. You wouldn't put too much in.
Indeed.
But so you try and Goldilocks it, whereas a lot of lenders are constantly trying to push the LTVs down and push the pricing up.
Yeah.
And it starts off with, a bit like I said before, those teaser rates. You know, they get someone on the hook, they pull them in, and they go, give you 70% loan to value at X. And then as they go through the deal, you find out it's not really 70 because they're knocking all these things off and they're making a reserve. Oh, I didn't realise there was a full stop in the wrong place on the title. Knock a bit off for that. And the borrowers are a bit stuck, and the brokers get committed because they've done 70% of the work, so they, the fees inside. Yeah. And it'd be very, very, and I've done this over the years many times, but it'd be very brave for a borrower to go, stop the music. I don't like you anymore.
Yeah.
But my view is, if someone's doing that on the in, once you're on the in, because you've got something to lose on the in. If you're sort of like salami slicing you on the in, once you get in, what happens next? And I'm not saying it always happens, but you do get the old sort of boiling frog sometimes with lenders, that they'll give people terms that are full of tripwires, and then people trip over the wires and they go, not my fault, mate. So and that's not good for long term either, because it leaves a bad taste. What you really want is, we borrow some money off you, it goes well, and guess what? We come back to you next time, and you want us to come back. You don't want this. He's never going to come back to us because we screwed him, but guess what? We did really well. And me going, I'm never going back to them two. And guess what? I'm going to tell everyone of my experiences.
Indeed. Look, I think you've covered some good points there. The amount of times we have, because look, you are a broker, aren't you? That's what that's what the background he came from, and thankfully I've polished him and I've enticed him to come on board, if you will. But you're a deal junkie, and there's loads of them out there. But we'll often have the chat where you want to do the deal, and a lot of the metrics are right, but the behaviour of the individual is horrendous, and you think, wow, this individual's like this when they want to borrow our money.
Be nice.
Bearing in mind, in my mind, I'm thinking, I know the effort that went into creating this money in the first place. Yeah, they're gonna be horrendous on the way through. So, and some end up not being, but there's such a good deal, they want to get it over the line, but some just are terrible, aren't they? I mean, we had one guy that when we looked at it retrospectively, he'd been involved in some massive diamond scam down in London with some rogue jewellery business, and I mean, some of the stories are just off the scale. But going back to your point about finding people and staff and resourcing growing a business, my old company, it was easy. I was 22 years in the industry. You get the black book out. I need a person with these skills. Oh yeah, I've worked with that lady or that guy, or this client was really impressive, and you just pick the phone up, and you generally, between me and the team of 10 or 12 of us, we'd resource the business. Because I'm in a new space now. I thought, right, how am I going to do this? Because I don't have the black book, I don't have the contacts, but I'll ring yourself.
Yeah.
I'll ring the guys at Together. They've been phenomenal with us. Mark Goldberg, Henry Moser himself, the wider team there. You know, they will give you advice. You've got quite close to some of our peers, and you'll phone them and say, look, we're looking for this type of person. And very often you'll have a list of 3 or 4 people. You're having a coffee with them, and your team's evolving as it needs to. So I think going to people who've got a good reputation in the industry and asking them, I've found 5 or 6 people, I've named some of them there, they've just been phenomenal to get to know. And sometimes they'll ring you for a favour, or we can't do this loan but I think you'll like it. It's been great for that, but that's your people skills piece that we keep touching on, isn't it?
And relationships that, you know, we used to do very similar when we were doing LDS, because we weren't really from that world. We knew it quite well, but we weren't from it. You'd ring someone up and say, I've got a CV on my desk, I quite like them, but they used to work for you, and I'll just say the name and you say yes or no. And sometimes a pregnant pause was that long, you say, don't need to say anything else. Enough
said.
But on paper, you'd go, wow, let's employ this person. And you just think, they worked for so-and-so 3 years ago, I'll just give them a quick call. And 9 times out of 10 in those scenarios, you get the negative response of, we fell for that as well. Or, definitely do. How long have you got? Someone say. I don't need to know the story. I just need to know it's a negative outcome.
But look, we'd have that in my old industry. You'd get CVs, and at face value they're great, but this person's moved on every 2 years. Right? There's a reason for that, isn't it? It can't always be the employer's fault. It takes 2 to tango in everything, doesn't it? And very often those people, they had so much potential, but they just couldn't stick.
Almost enemy.
And create the right career path for themselves in that industry for whatever reason. So it's a big alarm bell for me, that one. When the churn's off the scale, you're like, something's not right here.
Agreed. And you mentioned it briefly, Mark. There's probably not many people watching that won't know that you are the original brains behind LDS. Can we have a talk about how that was trying to introduce a new product into an industry that hasn't seen a new product probably since its inception? It was something genuinely groundbreaking. How was that?
I mean, there's thousands of new products in your world, but they're not really. I mean, we all know that they're not.
Indeed.
It's just a different way to package money up. This was a different way to package how a property was, or how a development was financed. So I think most people listening probably understand it, but we guaranteed to buy properties on the back end. We'd advance some money at the front end. That gave effectively like an insurance wrapper to the lender, guaranteed exit to the developer. The developers didn't really want to use the exit, so it's like all insurance. You want to have it, you don't want to use it. The summary I'd give of that business was, and I had a conversation with Tom Bloxham about this, and I'll tell you that story in a second, was it was a good idea, and everyone agreed it was a good idea, and it wasn't a very good business, and that wasn't really anything to do with us. And I told him the story, and he said, we're exactly the same in modular housing. You explain how modular housing works and how much better it is, theoretically, than traditional housing, and everyone goes, what a brilliant idea. You manufacture houses like cars or televisions, they come off the end of a conveyor belt, they're all perfect, you drop them in place, and away we go. Again, when it hits reality, some of these things, they just don't work. And that business started with, we didn't think it was massive risk, and we thought it had big upside. We had some serious interest without even putting ourselves out there from big private equity money, like serious sort of funds. And that sort of encouraged us, which is probably a bit of a false sort of flag. But ultimately, it just got to the point where the market's very hard, development finance market. The SME, and I don't mind saying this, you know, I've got a lot of SME developers who are friends, personal friends, but a lot of SME developers out there aren't very good. What happens is they go, I'm a plumber, John, I'm in a trade, and then they get a team going, and then the next natural step is start building houses. But when it doesn't go to plan, they don't want to take responsibility. And unfortunately, you know, if you're me and they've got a load of debt and interest rates go up, I can start blaming the government and the economy and COVID, and I can blame anyone. But you've just got to look at yourself and go, well, you know, that was always a risk for us. So they don't anticipate things. They sort of go, they get a spreadsheet out. Some of them don't even have a spreadsheet, and some of the spreadsheets they do have don't work. But that whole world, you're in a less risky position as a lender, and you're in a more vanilla position. We were almost like actively involved as a JV partner with most of these people, but it didn't work out in the end, that business. but it was nothing ventured.
But look, we got to know it as we started Stanford and came into the industry. You loved it, didn't you?
Yeah.
Everyone loved it.
Yeah.
And that was the problem when it enticed me into it. Everyone loved it.
And look, as a guy with a few GCSEs that scraped through a degree, even I got it, but you had to have 3 goes at explaining it to me, and I liked it. But a lot of the bigger lenders we came across didn't. But I'm not sure. Sometimes you just need a little bit of luck with a product, don't you? Trying to enter a space, and sometimes you get it, and sometimes you don't. But you point there on SME builders. Look, I'm a rubbish builder, terrible. But I can see the money in it if it's done right. And we've lent to a couple of SME builders who basically fit that description to a T. You're like, right, October last year, 300 grand finishes this site. Monitoring surveyor backs it up. 6 months later, something's not right. We bowl down there in the car, don't we, to Oxford? Yeah, about 1.2 million to finish this. What's changed? Have you undone 700 grand's worth of work in the last 6 months? You know, you're into the monitoring surveyor. Oh yeah, I might have got this one a bit wrong, but a bit wrong. Yeah. It's mental, isn't it? But they don't want to own up to the truth, because it's a problem for them, isn't it? And they're probably spending the benefit that should have been in the site before they've actually crystallised it. They're sponsoring stadiums at football matches and all sorts. But the project's massively in the red. It's, again, a massive learning curve, because that would not exist in any other industry I've dabbled in my life, you know.
Yeah. On the flip side, what we also saw with lenders, and I use the term loosely here, we'd be in a deal and we'd be in for £1 million and you'd have a senior at £9 million, simple maths. And everything would be, the broker would be telling you it's all ready to go, the lender couldn't wait to do it, they want to do it in 4 days, or whatever nonsense we're coming up with. And then we get offered through another part of the business, do you want to co-invest in this loan?
Yeah.
And it's like, and you just knew it was a little bit sort of vague, the terms, but you'd look and go, that's the one, we're on the other side. And you'd ring them up and say, we've been offered to invest in this loan, have you got the money? What is it? And it astonished me the amount of times that there was lenders, and again I use the term somewhat ironically loosely, that didn't have any money. Yeah. And they would go out and almost bait the market to get a loan, and then run around to the high net worths and the family offices to get people to chip in. And that's a flaky model, because if you get 9 people with £1 million each in that example, you only need one to go, actually, I've changed my mind.
Yeah.
And you see it all the time. So there was a lot of lenders who weren't really lenders. They go out and get a loan and tout it around the market. Yeah. And that's worrying, because you've got, serious developers sometimes, good people, and you can't then go back to them and say, that person your broker's introduced, and the broker might have introduced us to the deal. They're running around trying to get the money in the background. Or we know the credit lines, I'm trying not to name people here, the credit lines have been pulled. And we're on the other side of it, playing nice, going, we know they've not got any money, but we can't say that because we're not supposed to know.
Yeah.
Because an NDA or something.
We've looked at, do we want to grow the business beyond our own wealth and some high net worths who've invested in it? And you look at the institutional debt that's in the market, and we would struggle to deal with the criteria they demand.
Highly conditional,
A team of however many we are now, 6 or 7 in totality, we'd be at probably 30 if we had
for what ends?
Our loan book in institutional debt, you would just be, I mean, the legal fees would be horrendous. The admin, the MI you'd be giving to the it'd be well, it's just not us. We couldn't cope with it. But you've rightly said there's so many out there. We'll get a call every week. I've got a loan with X. They can't provide me my drawdown. Can you help me out?
I mean, it's good that they admit it, because in a lot of instances they don't.
Oh yeah.
It becomes almost like a bit of a, oh, well, you can only draw down on a Tuesday on a full moon and it's Wednesday now and you've missed it for a month. And it's like, is this your way to say you've not got any money? Oh, no, it's the borrower's fault. It's not. And it's always the borrower's fault. Sometimes it is, but more often than not in those scenarios, it's just a lender throwing out hurdles.
And that's where, like Stuart says, we tend to be pretty good at actually staying in our lane. We're not going out there looking for a 95% advance rate. We're quite happy doing what we say we're going to do, governed by the fact that if Stuart likes it, if Darryl likes it, if I like it, we can make it work.
There's a massive thing around strategy of what you don't do. You don't have to list it. You just know what you do, and therefore you don't do everything else on the planet that you could possibly do. But there are people out there who just, what have you got? I'll borrow your money against it.
And I think that's the beauty of us having a chunk of our own capital in there. we prefer to lend 1 to 3 million quid, 12 to 18 months. We'd prefer a bridge, but we do loads of dev. And don't mind it either, whereas a lot of lenders just do bridging. But we've got a 5.5 million quid loan in central London, haven't we?
Yeah.
We tend to not do much below £1 million because you put the same effort into 250 grand DD as you do 5.5 million. But you've got to have some principles of, look, we like to lend on this, but every deal is different. Every person's an individual. Every site's different and got its own nuances around Section 106s and planning issues and overhead lines and all sorts. You've just got to take a view and back yourself. Look, we're either comfortable, we can lend on this, and we'll manage through any obstacles that come in the way, or we're not. And I think that's where the 3 different backgrounds, because our other business partner, Darryl, who's more introvert than us, hence why he's probably not sat here.
He's running the business, isn't he?
Indeed he is. But we've got different views of that risk profile that comes with all these different dynamics on a loan, and I think between us usually one of us will be, you know what, I'm putting my name to this. The Notting Hill one, I piled out there on my line bike with my bag in the front and did a lot of the sort of local DD myself, because it's a small pond, isn't it? Everywhere is. You only need to go into the local estate agents. Look, I'm lending on this house, what's your view on it? When, what's the history of it? They know, don't they? And I think that's where we can probably be a bit different. And we've looked at some real quirky stuff, haven't we? Yeah. I mean, we've ended up owning a care home in Glasgow off the back of one of the first loans we did, where we didn't do our due diligence, but we're making it work, aren't we? And we love it, and we love the team, and we've ended up with a care business on the side that's going to probably buy another home. But look,
that's the entrepreneur in you. That
they're the different things you can do when you're not beholden to an institutional funding line, I suppose.
You're not. What you also see you see it in the investment world as well. If somebody's got a pot of money, I mean, we did really, really well off this for years in the ground rent world. That somebody have 100 million quid to spend, and they'd only spent 95, and they'd ring up and say, "Right, Mark, I need to place 5 million quid. What have you got?" And I say, "I'm not a seller," which is always a response to those questions. But let me have a look. And you go and get 2 to 3 million stock, and say, "There you go." And they'd give you 5 begrudgingly because they'd blend it in. But that's bad business. Now, I get why they would do it, because it was part of ticking their boxes, but because they've been conditioned, mandated, whatever you want to call it, to invest 100 by month 9, month 12, it drove that behaviour of run around and pay whatever you need to pay to top it up to trigger the next lot of capital. You see that in lending as well. People, famous examples, 2008, RBS, etc. But if you speak to... I won't say him, but you both know, I'll say his name after. He worked at a big Irish bank, and he was telling me this. I was in a car with him for 2 or 3 hours once, and he was telling me the story about what it was like being in a bank during the crash. Before and during the crash, but before. And he gets from up on high saying, "Can you just go back out to all the people who are in the loan book at the moment and just offer them a bit more money?" So there'd be, 50, 60, 70% LTV, and you just get a phone call. Do you want another 10%?
Yeah.
Same terms, yeah. Go on then. Right. Well, fax you something, you sign it, send it back. You'll have the money this afternoon. Because they were just trying to force that much money into the system. So you do get those, and then you become a bit sort of, if everyone wants to do so, I'm a bit awkward. So if everyone wants to do it, I'm not doing it. Which is how we've ended up getting into all these little things we're into now. Because it tends to be everyone's running that way, and we go that way.
But I think, look, it's a good lesson. The first business I was a partner in with a guy in East Manchester. He'd been in special measures with the Allied Irish, and it was horrendous. I came in sort of a couple of years after it, but it was exactly that. In the good days, they were throwing money at this guy. Buy this, buy that. He's setting up property businesses. He's buying plant and equipment. The tide turns, they yank the chain. Well, he's not that liquid to correct it. Do you know what I mean? And they near ruined his business, near ruined him. Thankfully, he came through it and he's gone off and thrived. But he learned a painful lesson. And I did, because in our game it got tight, even though it's broadly recession proof, because people need water, they need light, they need heat, don't they? It never really gets affected by the recession, that maintenance space. But I'll always think when we're doing a loan, particularly the bigger ones, right?
What if?
If 08 happens,
what if?
Right? And our loan book gets really sticky and a 12-month becomes a 24 or a 30 or whatever, are we liquid enough that our world's not going to fall out around us? And you and Darryl want the money out the door, and I do, but you've always got to make sure you've got enough that if it gets tight, and again, another reason why I'm not keen on the institutional stuff, because I've heard some horror stories from back in the day when that market got tight and the terms were changing, and the institutions writing to your borrower directly and cutting you out, saying, oh, by the way, the terms has changed, and the borrower's like,
I'll sell the loan.
Who are you?
Yeah.
Who are you? I borrowed off Stanford, not off you. So you've got to not get giddy, and you've got to remember the cycles, isn't there? Particularly in property.
Yeah.
I mean, you wear this t-shirt miles better than me, but there's booms and there's crashes, isn't there? It's like, I'm not a massive fan, ironically, of higher end property in central London at the moment. I just think there's way too much of it on the market. Everyone's, if you believe part of what you read in the paper, everyone's moving to Dubai or Monaco or wherever. There's so much stock there that just doesn't sit comfortably with me. But see, you've got to have your wits about you. You can't just get lost in this gravy train of the markets doing that, because it corrects, doesn't it? It ebbs and flows. You've got to be able to be prepared to ride them and remember the bad days in the good times. I think that'll stand you in good stead.
I think the best time to be a lender or an investor, and lending's a sort of form of investing, you put your money out the door for a return, is in a really, really bad market. Because in a good market, the borrowers start to dictate the terms.
They do.
And you either take those terms or you don't do any business. Whereas in a bad market, you can pick and choose. And I've always found it, even since I was very young, bizarre in property. The more expensive it gets, the more people want it. Don't forget the product's the same. Two-bed terraced house doesn't get any bigger when it gets more expensive, doesn't get any smaller. So the more expensive it gets, the more people chase it, and the more expensive it gets. And then eventually the bubble pops, as it does every few years, and it drops. Nobody wants it. But that's driven by lending as well. The lenders, not you lenders, your sort of kind, but the bigger lenders just act as a herd. So the Northern Rock thing, whilst Northern Rock get all the bad praise, I was around at the time. Bad praise, bad sort of rep. Northern Rock were just the tip of the spear, really, and there's a load of others behind. And what had happened is everyone would be doing 85% LTV. And then somebody would come out, Mortgage Express or somebody with Bradford and Bingley, and they all went bust, these people, by the way. So if you look at the big pool of them, they all went bust. It's just Northern Rock were the most famous. They go, we'll do 90 now. Monday morning, we'll do 90%. And you can imagine the sort of the broker flows go 90%. So then Northern Rock go, we'll do 90%, I'll give you 1% cash back. And it just went to the point where they were doing something stupid like 115% equivalent LTV.
Wow.
And it popped. And then nobody could get any debt from anywhere. And all right, we had a credit crunch. And property's the same. Up and up and up and up and up and up. It doesn't always crash. But it will soften. But the best time to be lending or investing is on the down, not on the up.
100%. And I think if you can keep your head, because you don't have the pressures of, I don't have any money, where do I go to fund this loan or whatever, if you are liquid enough to manage your way through that is the time where you are going to strike, and you are really going to kick your business on if you've got the liquidity. But I think you made a couple of great points there and previously that we probably want to touch on. The amount of people who come for a loan who blatantly don't have any money. So I've got no skin to put in the game. I've got no deposit to put down. I want to borrow everything. Here's my assets and liability statement, and you take a quick look at it and think, wow, there's nothing there. Yeah, indeed. Yeah, well, it's never true, is it?
It's optimistic.
It's never under.
We've seen the development profit from the development you're looking to loan in an assets and liabilities. You need 3 years to make that, man. You might not make it.
Indeed, yeah. Or I've got this life insurance policy. I've got this. I've got that. I've got this pension. But it's your pension. It's alarming. It sends so many alarm bells ringing. You're like,
world's quickest no.
I would rather lend somebody money at a much less rate if they've just got the skin in the game, that they're going to see it out. Because the worst thing you can do in our game, when you admit you're a pretty bad builder, is have to step in and finish it. It's terrible, isn't it? No one wants that. And I think, look, we're just trying with that broker network we touched on earlier and our contacts, and you've been massively helpful in that regard, Mark. So thank you again for that over the last few years. Is just get to know those brokers and those people who want to borrow money, who suit our dynamic and suit our sort of ethos of how we want to do business and how we want to lend, because we'll repeat. And you know what, if you get a better deal, we'll probably beat it, because we like you, we trust you, and we're in the business of lending money, aren't we? It's chasing it to those sort of fly-by-night borrowers. And no, let's be honest, we got stung big time right at the start, didn't we, by a guy who just the lies that came through this fella were off the scale. You could write a book on it. We didn't do our DD, but what a learning curve. I mean, most people would have said, actually, lending's not for me at that point. I was like, no, I'm not having that. That ain't going to be my journey in the lending world done. I'm going to learn from it, and we haven't repeated it as yet. We've sailed close to the wind a few times, but we haven't repeated it.
There is, so a pal of mine set a wee banny car, and he still sort of runs it. And when I first met him about 10 years ago, he told me this story, and he said, we aim to lose money on a certain percent of the cars we deal. It's like, what do you mean? Like, you're trying to lose money? And he said, we aim to lose money on a certain number of cars we do. And it was a bit of a sort of, like, not a party piece, but just this thing he said. And I was like, you're going to have to explain this to me, go on. And he said, well, our view is, if we're not doing the numbers, if we're not losing money on a certain number of cars, or percentage, whatever it was, we're not doing enough business. If we're losing money on too many cars, we're pricing wrong. If we're not losing money enough, we can push it. So the point I'm getting to is, as a lender at scale, there is an acceptance that they won't all go to plan. And sometimes it's your fault, sometimes it's a lender's fault, that's a borrower's fault, sometimes it's just really bad luck. But I think there has to be, you don't aim for it, but there's an acceptance that he wasn't going, we don't look at some cars and go, right, well, we'll lose money on that one. It's just, and obviously massive numbers in that business, but to optimise, and optimise depends sort of what you're aiming for. There is an acceptance. Look at any big lender, look at Lloyds Bank, they will have a provision for bad debts.
Indeed.
Not because they're bad debts necessarily, but because they go, doesn't matter how good we think we are. Shit happens.
100%.
So there is that. Like, unfortunately, it might have been on your first deal, but as you say, it was maybe a cheap lesson with the benefit.
It was better than that. It was our first 2 deals. We went twice to the same guy. But anyway, we'll move on. But
that's back to honesty and integrity and humility, that.
But I think that's a massive point. Look, Darryl would faint at the thought of it, wouldn't he? But you are going to, if you do 10 loans, couple of them aren't going to go right. They're not going to go to plan. But if in that balance, you're making the margin you set out to make, which is better than playing the stock market, which is better than sticking it in locked in the bank somewhere, then that's what you're doing it for, isn't it?
You're also building a business, what you do. So if you're just investing in property joint stocks, you're not building a business. You've just got a portfolio. And if you sell it, you get your money back. Whereas in yours, if you make 100 quid a year, you might be worth 1,500 quid, so you're getting a multiplier effect on your margins as well.
100%. I think that's took a bit of getting used to for me though, Mark, because in my old industry, having been involved in being a shareholder in building and selling 2 businesses, you have an out. You're always working to an out. Right, I'm going to grow the business, I'm going to professionalise it, we're going to probably revolutionise it rather than evolve through the gears, if you will. And you get to a point where, right, market dynamics, who's interested in the sector, and basically it's your profit times a multiple, give or take free cash, give or take the debt on the business. I don't really see that this business is ever sellable. I mean, who really buys loan books for anything other than what they are? We've had a few people come to us and say, look, we've been in it for years, 2nd, 3rd generation, we don't really like it, do you want to buy it? Well, we'll look at the loan book and say, but we're thinking loan book minus, they're thinking loan book plus. You're never going to agree, are you? Whereas that's took a bit of getting used to it. A lot of my friends are like, you won't stick this out because it's not sellable, but it ain't about that. It's about working the capital you've shed blood, sweat and tears to create, and making sure you're not spending it, working it, growing it, creating a business, creating a brand that's sustainable for generations. Because I hope the kids come in. I'm hoping out of 3, one of them does, and runs it, because it is a phenomenal industry. And I remember saying to you earlier, Mark, I can't believe how many deals there is, how many lenders, how many brokers. And he rightfully put me in my place and said, have you ever been on a plane? I'm like, where's he going with this? Look out the window. Right, what do you see? You either see green fields or buildings. I thought, all right, it's got a point here.
Biggest asset class in the world. Resi property, but then if you had commercial, it's even bigger. But it's the biggest asset class in the world. I mean, to your point there, I'm almost correcting myself here. So I get asked all the time, so you're going to sell out at some point. And I always tell the same story. So I sell out today and I get 100 quid. I've got to pay a load of tax, so I've got 50 quid, simple maths.
Yeah.
And then I go, right, I've got 50 quid. I don't want to put it in the bank, I need to invest it. What's the best investment I know? Well, I quite like ground rents, we've got insurance investments. So I've just halved my capital and sold all the assets. And you're probably not too distant, are you? You're looking at it, you're going, well, why would I stop?
Yeah.
And if you get to a certain scale, if you're together or you challenge a bank, it's a machine that sucks in things and spins things around and makes money. Whereas you're probably right, at the level you're pitching it at, it's just a loan book.
Yeah.
And if you wait 18 months, it cycles itself out.
If you ever want to stop, if one of the kids doesn't want to come
down.
in, look, we say 18, in reality it's probably nearer 30. But it starts to fundamentally pay back after 6-9 months if you want to get off the train. But for the record, we don't, do we? We probably want to take, 100 million to 200, which will be an element of high net worth support, phone a friend and whatnot, but the vast majority of that will be our own money. So, we're hoping to use the next couple of years to double where we've got to, aren't we? I think at that point we're probably happy. We don't want the masses of staff again. No. I've worn that T-shirt. It almost burnt me out.
I think that's what people also, that's what I have to try and put across as the message for Stamford. This is somebody that has given everything to their career to achieve what you've achieved, and then to put it back out the door again.
To pay tax as well.
Yeah. We care about every pound that goes out the door. It's
look, with hindsight, that tax thing's a painful old pill to swallow. But I shouldn't probably be sat here. I should be somewhere else. But I didn't do that when I couldn't quite have convinced my wife that was the right thing to do at the time. But no, never say never.
I think with the high net worths for you versus others as well, because obviously we know a lot of the same people. With a lot of other people say we're funded by high net worths. What they really mean is you've got a closed-ended investment fund that they get 250 grand off. People who are sort of high net worth by definition, but they're not swimming in cash. Some of the people Stuart and I know, I can introduce you to Stuart, they might give him 5, 10, 15 million quid. And they won't do it on an absolute handshake, but it won't be through some convoluted fund structure. It'll be, right, I'll give you 10, let's see how it goes. So, and the reason for that is not because they've got so much money, it's because you look at Stuart and go, well, he's got a hell of a lot of his own money in. My money ranks behind him. I know him, I like him. I can believe in this. Because if it goes wrong, you're going to suffer a lot more pain. So you talk about skin in the game.
Indeed.
You can't really get much more skin in the game than you've got.
No, you can't. And look, we owe him a bottle of wine for that, because he did introduce us to one guy. You haven't used his money yet, so you need to get on with that.
But again, he's my mate, and he was asking me, he'd had an exit for quite a lot of money. Should I go into property? And I said, you really just want to get a return. I'm trying not to name it. You just want to get a return on your money for the lowest risk possible. Lending's much easier than property. What people do property is they like it because it's really tangible, and what they really like is owning something around the corner from the house. Then they can say to all the mates,
I own that.
Domino's Pizza, I own that. And if you said there's Domino's Pizza in Plymouth and it's a better return, they'd probably say, I don't want to go to Plymouth. And it's Domino's Pizza, you're covenant sort of investing anyway. So actually lending is a little bit not for that for some people. When you explain that really you just want to get a return on your money, you can get a better return on your cash for this. You've not got any massive capital growth, but if you look at what you get off one of the wealth managers, 3.5% on cash, and you can get a lot more than that working with Stuart, it's a bit of a no-brainer. And they meet Stuart, they meet you, they meet Darryl, and go, good lads, good setup.
And look, in a doomsday scenario, their money's more protected than ours. So why wouldn't they? And again, that introduction you did for us, another one we owe him for. We got a structure.
I don't take money, by the way, just for the record. It's just because I like helping both sides.
But we came up with a structure that was very different for us, but he knew a lot about contracts and whatnot, and brought a lot of strength to the table about, right, how do we get ourselves comfortable here, that our money's going into a pot together and we're lending it out. The security needs to be right. What's the risk profile we're lending on? Because the high net worth lending we'd done prior to that, or borrowing for a better description, was me phoning my ex-business partner and him firing the money over because we trust each other that much. It's not really sustainable, is it? So we've come up with this, and now we've taken that and back engineered it into to my ex-partner's money as well. So we've got that platform now to do a bit more of that as we grow.
Syndicate almost, aren't you?
Indeed.
You might only end up with 8 or 9 people, but you might have 250 million pounds.
Indeed, yeah.
Anyway, slightly conscious of time. If we're going to wrap up, just to get a bit of a wrap up on what you're both hoping to see happen over the next 12, 18 months? What does the future look like for Landmark? What does it look like for Stamford in your Mark first, I guess?
So we've just started this new EV business, which is massive potential in that. And we've got, I won't go into too much detail because it's not the right audience, but we've got a lot of, bizarrely really, we realised we had a load of USPs for putting EVs, electric vehicle charging, into apartment buildings, because the EV industry doesn't understand apartment buildings, and we do. And actually, to go and put some wires in a few fancy sockets isn't that difficult. So there's a lot of potential in that.
Interesting. In your existing portfolio as well?
So we've done it on our portfolio. We've done over £2 billion of GDV installs in the last few weeks.
Wow.
So there's people, probably, if I've got my phone, I could show you people charging the cars as we speak. And then we're rolling it out more and more and more. But there is very much if we build it, they will come. Because in most instances, there's not that many EV cars in our buildings, because guess what? There's no chargers. So we did have a few people saying, there's no point putting charging because no one's got an EV car. And it's like supply and demand.
Yeah.
Demand. So there's that. If you ask me selfishly what I'd like, honestly, which I'll always give you an honest answer, it's volatility. that's where we had our best year ever during the pandemic.
Really?
Yeah. I'm not glad the pandemic happened. I've always got to say that, but everyone got scared. But again, interest rates dropped through the floor. The market needed to sell. There was no buyers, so we just carried on doing what we were doing, and we bought things probably better.
Yeah.
So they became more valuable because interest rates were lower, and there was more volatility, capital flight to safety. Yet we could buy them cheaper. And sometimes you lie awake at night thinking, what have I missed?
Yeah.
But volatility suits us because people get scared.
Very interesting.
But look, the EV piece is massive, and I've no doubt we'll end up hopefully lending you some money on that, because I was never lending on ground rent because I didn't understand it. That took him 5 attempts to get me to understand that. LDS the same. But look, it's been great, hasn't it? And we've been open, and you're going to go off and you'll refinance a much reduced rate because you've proven the concept and whatnot, and fair play to you. I think, look, what are we hoping for, Pete? We want to double the size of the business. We want to do it over the next 24 months, not the next 3. We're going to have to evolve process, procedure. We were having a chat the other week. We went from no process and procedure to probably worse than Lloyds and Barclays. So we need to stream that indeed. But look, we just want to see the business evolve and grow and get better. We need to increase our broker relationships, don't we? The originations need to go up. The team's probably going to go to 10 or 12 people in totality over that 2 years. And then we will just hopefully eat, sleep, repeat, borrowing and lending. We need to be prepared for the bumps in the road because they'll come, whether that be an individual loan or general market dynamics or whatever. But look, it's a buoyant market, isn't it? And you just want to stay ahead of the game and ahead of the competition and be a bit smarter and wiser, and we'll develop our network. I've no doubt Mark will introduce us to more solid people who can help us or fund us or whatever as we grow. So look, it's exciting times, isn't it?
Absolutely.
I'll make a prediction that when you get to whatever number you want to get to,
it goes up another 100.
It'll be the eternal carrot.
I'll have to phone more friends.
Oh, well, Mark, thank you so much for joining us. Great to have you,
awesome.
And thank you very much.
Cheers.
And look forward to seeing what happens over the next few months.
Cheers, Peter. Thank you. Cheers, Mark.
All the best.